I won't stop till I hear him say,
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. Guys and gals, as promised, I'd mentioned to you guys that every single time YouTube pays me more than $500 that I was going to be giving away $50 worth of XLM to one lucky YouTube subscriber. Here's a screenshot of how much money YouTube paid me, so you guys are in for a giveaway. With that being said, make sure that you guys stick around for this entire YouTube video breakdown to hear at the end of the video how you can be a part of the CYPRX $50 XLM giveaway. In today's video breakdown, we're going to be covering a GBP JPY trade, going over some CYPRX higher time frame confluences that I utilize to capitalize on some positions here in the CYPRX trading community. I send out my analysis to the students well in advance before the trades actually play out. You guys can see some of the screen shares that I go over in the Discord community group chat here in this video breakdown. Smash that thumbs up button if videos like this help you guys understand technical analysis a little bit better, and let's get into today's video breakdown. All right, you guys can see the Discord chat right here.
Yeah.
All right, so last night I sent you guys a picture screenshot. Looks like this. This is the daily perspective. I said I'm bullish above 163,800. And the reason being is because we have this liquidity grab on the daily time frame beneath double bottom lows. And then here's the most significant higher low. After that, the market rallied higher, pulled back, created another significant higher low on the daily, retested that 163,800, and then rallied higher, breaking the previous market structure high right here. Now, even though these are all wicks on the daily, these are still daily time frame higher highs and higher lows. Okay, you need to take the wicks into consideration because that's the highest point in price. That price went. Same thing, vice versa to the downside, the wicks, right? Because on the lower time frame, these were all it would all be candlestick bodies, right? So with that being said, I said to you guys as well, best case scenario would be a drastic pullback on the higher time frame before a continuation into 167. 167 still remains my target. However, discount price isn't always guaranteed. I always let you guys know that because, you know, the market sometimes likes to just continue bullish wherever it's standing from. It doesn't always give you that nice pullback. So that's always just a good reminder. But I said I'll be monitoring price the remainder of this week, and next week I'll be looking for long setups 167 until 163,800 is broken bearish. So that still stands for me. 163,800, as long as that's not broken bearish, I'm going to be buying GJ only. Okay. Then I said right here 1:12 a.m. I'm looking at GJ, and then currently floating, looking at this position. So we're going to go over this one first, and then we're going to go over to the New York position that I sent you guys down here. These are the take profits. I send you guys, both of them were smashed. We'll go over the take profits. Then from this morning, I sent my entry a little bit late. I was laying in bed, and I don't trade on my trading view in bed. I trade off MetaTrader only. So I try to hurry up and do an analysis real quick for you guys on trading view and send it before the take profit one was hit. So I sent it before take profit one was hit. And then you guys can see shortly after TP1 was hit, and that was at the 165 psych level. And I'll go over why I was targeting that level and whatnot. Here's a screenshot from MetaTrader 4. My entry was at 164,590. Once that TP1 was hit, I was laying in bed and I was like, you know, I made $3,000. I'm done for the day. I'm not going to sit there and hold it. There's no point. You know, I'm already comfortable. I'm snuggled up, chilling right now. I might as well. So if it does reverse back to the upside, cool. You know, I'll have to beat myself up for that one for closing it a little bit too early, but we'll see what happens. I don't know what the charts are doing right now. So just showing you guys, you know, that I try to give you guys a little bit of a heads up, you know, before I'm entered into positions, at least as best as I can, and how that's all playing out. All right. So let's go over to the charts. I took all of these trades based off of higher time frame only. So let's share, resume screen. Boom. Okay. All right. So all of these trades were placed mainly off of my MetaTrader. I didn't do trading view analysis until after I sent you guys a screenshot. You guys know that I really don't like to do analysis on trading view anymore. I really only trade off MetaTrader now. It just saves me a lot more time, and I can do it from the comfort of my cell phone. That's just a comfortability level that I've reached in my trading. You guys will eventually hopefully get there. So first trade entry, let's replay price action so that way we can see what I was looking at before we jump into the New York session. All right, so London session, very simplistic. You guys know already, 15-minute time frame. I did not jump down to the lower time frame for this, so it was very easy to see all these confluences. The first thing that I saw, right? What's the very first thing that we see when London gets past price action here above these highs? And just not even going down to the lower time frame, just on the 15-minute. What's significant about where price got past during London? Where is it operating at?
At a high.
Exactly. It was operating at a high. So that was one of my confluences to sit there and say, okay, the banking institutions, logically speaking, are not going to buy from where Asia sold from. Okay. They're going to buy from lows. They're going to start to target the liquidity beneath these lows. So I identified trendline liquidity all in this general vicinity. Okay. We have a triple touch of a trend line right here during the previous day. Okay. So we see what? A triple touch. We can call this the triple thread or whatever it is that you guys want to call it, right? We see a triple touch of a trend line, right, where trendline liquidity traders exist all in the previous day's worth of price action from this Asia session to this Asia session. That's where the daily area of liquidity is. Well, we know that the market makers like to attack the previous day's liquidity in the form of highs or lows. So with that being said, the New York session low was the area of liquidity I was seeking for the market makers for London session to come down and attack. Beautifully enough, the market opened and tanked right into that. Now, what were my other confluences? So number one, we have market was operating at a high for London. That gives me the confluence to sit on my hands and wait for discounted price, right? I'm not going to buy from a high. That's not an investor's perspective. From an investor's perspective, we want to buy low and sell high. Okay. We already know that the market overall via fundamentals for GBP JPY is bullish. Just to prove my theory to you guys, we see BOJ retains easy monetary policy staying outside the global tightening tide. So we know already an easy monetary policy stance is, them stimulating the economy, pumping stimulus into the market. Okay. Internally, that's bad for the economy. That means that the economy is weak and they need to stimulate it. They need to support it. And we see over here, that we're still considering that 50 BPS rate hike from Bank of England. So like I said, I'm still bullish on GBP JPY until this stance, until this divergence changes, where we start to see a more loosening monetary policy from the Bank of England and a tighter monetary policy or rate hikes come in from Bank of Japan, right? That analysis is still going to stay until we see that divergence flip. So that was another confluence surrounding this trade, giving me the confidence to only look for buy positions, because higher time frame on the 4 hour and the daily is still bullish. We're still creating higher highs and higher lows. Okay, even though I've told you guys multiple times, GJ likes these drastic pullbacks, you can see that the buying opportunities are much more prevalent than the selling opportunities. Okay, so moving on. All right, we've gone over price was at a high. We've gone over trendline liquidity from the previous day, and that was my target area for the banking institutions to come grab that momentum in the market that they need to drive price higher for their target and take profit areas. The second thing, what are we going to be paying attention to? We're going to be paying attention to the previous day's area sweep of liquidity from a low on the 15-minute chart, identifying this, the fractal break in structure, and the higher low, taking our Fibonacci, okay, from the previous day session, from that significant higher low after the sweep of liquidity, after the market breaks fractal structure. Okay, so this is what we're going to be looking for on the 15-minute chart. Let's dive in. All right, so previous day's price action. Okay, if we see already that the market has topped out and we see that the market already has created trendline liquidity, and we know that the market most likely is going to attack either the previous day's high or the previous day's low, well, that consists of these two areas: the high from previous day and the low from previous day, right? So we know that the market's not going to buy from this area and drive price higher. Most likely, what are they going to do? They're going to drive price into these discounted areas from the previous day lows. So we can look over here, okay, to the left-hand side to determine where we're going to be taking our Fibonacci from a low that we can buy at a form of discount, right? Where I tell you guys the most significant higher low that you need to be looking and pay attention to is the sweep of liquidity. Well, here we see a London session higher low that comes in right after the market during the daily candlestick low from Asia session that was printed, grabs and sweeps liquidity. Right here, you can see a low that was violated. This is, again, all of my analysis was on the 15-minute chart only. I didn't jump down to the lower time frame for these trades. Okay, I'll get rid of the moving averages. We see the market sweeps a low from Asia session and runs higher. The market stops, pulls back, creates a significant higher low right when London session opens, and drives price higher. So we have two areas of interest that we can seek to buy in the form of discount, where we know banking institutions sought to buy from. Now, utilizing our piggyback methodology, we know also there are two significant areas during London session, Asia and New York, that we're seeking to buy from, and that is taking from the candlestick bodies down to the wick and extending that over. That's the first significant area and the lowest point in price action from London that we're going to be looking at. And the second one was right here, from the candlestick bodies down to the lowest point of the wick and extending that over. Now, the most significant thing about this price action here that I did not like was it came into the New York manipulation window. And prior to that, we can clearly see the CYPRX strategy pattern right here play out, where we see a low gets violated. We see a market run on highs, meaning that the market makers have no interest in pushing price lower. And then they stabilize that theory by creating a higher low and putting in another buy position, driving price higher again. So this was the area of interest I was taking my Fibonacci from, just based off of those simple methodologies. Okay. Now coming over here, you guys can see how I'm starting to build my confluences. We have trendline liquidity. We have reason to believe that the market's going to drop lower. We have reason to believe that the banking institutions are going to buy from this significant area and not this one, because this falls into the manipulation window for New York session. So what's beneath here? Trendline liquidity. Okay, trendline liquidity. And what else is significant about this area? We see that it was utilized as a catalyst the previous day from New York session to take buy positions from. So this area had already been attacked. Okay, this area has already been attacked. So we're looking at a new area. This area is canceled out. Now we're focusing more so on this one. Okay, because this area has not been canceled out yet. Okay, so with that being said, all I simply did to catch this move last night was I took my Fibonacci. Again, the Fibonacci tool is a tool utilized to measure institutionalized discount, okay, to give us the best RR, the best possible return on our initial investment based off the higher time frame trend, which is clearly bullish, based off of lower time frame entries. Okay, so taking it from the higher low after the sweep of liquidity and extending that all the way up to the triple top that we see here. Okay, you can see that I entered roughly at around 79 to 70% discount. My take profit areas were for the banking institutions to come and grab early sellers. Okay, now if we jump down to the lower time frame just to confirm that there are early sellers in this area, I'll go to the 5 minute. We can see, actually we might not be able to see it on the 5. Let's go to the, let's see 2 minute, but we see a triple touch of a trend line. Okay, right here in the London manipulation window. All right, I've told you guys multiple times that 3 touches of a trend line, the banks and institutions, they're going to come back for that money. So those were my target areas. I gave you guys take profit 1. My take profit 1 was when we broke this market structure. I sent you guys that TP1 was right there, and TP2 was above London session highs. Market came back for those London session highs. This is exactly why I tell you guys to take partials after the market violates highs, because look what happens. The market violates an area of liquidity where there were retail sellers in the form of trend lines above these highs. They decided that that was an area where they wanted to take profit, and boom, the market completely reversed. Okay, so this is one of those things where you would have had to fight greed. You would have thought that the market's just going to continue up because it's driving, right? And if you're not paying attention to your greed, you're not paying attention to taking partials, then it's going to mess you up. You're gonna get cocky. You're gonna think that the market's going to continue. You're not going to take partials from here, and you're just going to keep bleeding your accounts. So this was a beautiful higher time frame entry. GBP JPY, absolutely phenomenal. Easy risk to reward based off the higher time frame, right? My stop loss originally was beneath the previous low from where the market grabbed liquidity from. So safe stops would be beneath this low. Tight stops would be beneath this low. So when I first entered into the market, my stops were beneath this low. Then once the market put me into profit, I'd started scaling them up. Easy peasy, 1, 2, 3. All right, so let's go into now New York sessions trade breakdown from today. We'll go back to the 15-minute time frame because I utilized the same time frame to enter into today's trade. All right, even though New York session at the beginning of the session today sold off, does that make price action bearish? It does not. It does not make price action bearish. You just have to understand, okay, that the banking institutions are not going to buy from a high. And we can see again, what does New York session do? New York session gets past price action in their manipulation window. Look at you on the dot. They sell off. Boom. They drive price higher to build that liquidity underneath of lows. And then they take sell positions to push price down into a potential discounted area where they feel fit to buy from. So same thing here. Before we just started that retracement back down to the original entry area, same criteria on the 15-minute chart. I had identified that the market was at a high during the open of New York session. And as an investor, I'm not going to buy from these highs. So I sat on my hands. Now, I wasn't expecting this nasty of a pullback, but we got that pullback. Okay. Now, once the market started dipping down, I was getting up and I was like, okay, cool. This is an area of liquidity that needs to be canceled out internally. So I started to look at the bigger perspective, more areas over here to the left-hand side of interest in the form of this trend line liquidity that was being built. Okay, so we now have on the higher time frame, on the hourly, this is going to be a triple touch of a trend line. Okay, where we see a low here. That's 1 touch, 2 touches, and then 3 touches. So we have these fractal trend lines that we're looking at for the market to take. And we also have these higher time frame trend lines. So if I go to the hourly, you can see, okay, this is a hourly trend line that was being created. Okay. So how I caught this trade was on the hourly time frame. Now, if we look to the left-hand side, same thing. So if this is the trend line liquidity that the market's going to take, we need to look to the left-hand side at a previous day's area of interest where the bank and institution showed us a willingness to sweep lows during the day opens price action. Okay, so if this is the day that started that price action, where did they sweep lows from and drive price higher? Okay, so once I got that significant area of interest, I'll jump down now to the 15-minute time frame to where the banks could potentially target underneath of the lowest point of the what? The low that started the trend line. So I was expecting this dump to come right beneath the first touch of that 3 touches of this trend line. Okay, so then I started to dial into price and say to myself, let me get rid of all these red drawings so it doesn't confuse anybody. Where is an area of interest during New York and London and Asia session where the bank swept liquidity and ran price higher, breaking higher time frame structure? Okay, so if we see right here, we see 2 significant areas of interest, same pattern. Okay, here was the first one where during the daily open, the market swept lows and made new highs. Okay, so this was the first area of interest that I had designated where I was taking my wicks to the bodies and extending it all the way over to the right-hand side. Okay, same thing coming into this London session. What do we see? We see a low violated. We see a grab of liquidity and a higher low right during the what? The London session open. Okay, so here on the 15-minute chart, we can see the lowest point in price action highlighting from the candlestick bodies down to the wick and extending that over to the right-hand side. This was the most significant higher low on the 15-minute chart that was formed after the grab of liquidity during the rollover from Asia to London. So I had 2 areas of interest marked off. Again, that was this one right here. And again, from the higher low after the grab of liquidity, this one right here. So from the wicks down to the bodies, or the wicks up to the bodies, however you want to, label that, and extending that over. Again, why am I looking at this one too? Because here's the grab of liquidity. Here's the low. Here's the higher low after that grab of liquidity. Same scenario here. Grab of liquidity, higher low after the grab of liquidity is the most significant one, and extending that all the way over. So those were my 2 areas of interest where I was seeking to take my Fibonacci from. Okay, and again, just based off higher time frame entry, no lower time frame confluences. I did not jump down to the 5 or the 1 minute for my entry criteria here. I just solely traded these off of higher time frame, mainly because when I'm on my my MetaTrader 4 app or MetaTrader 5 app, whichever one you guys use, and you're on the lower time frame on those apps, you can't really distinguish price action too well. So when I'm laying in bed and I'm trading and I'm not at my computer and I'm only trading on MetaTrader, then I only base my trades off the higher time frame, so that way I don't get manipulated. Okay, but so very simplistic. All I simply did was I waited for this trend line liquidity low to get tapped out, which was roughly at around the psych level 164,800. Once that happened, the next psych level underneath of that was 164,500, right? And so if the banking institutions are going to take discount from 164,500, which just so happens to correlate with the low from London session that we established, again, that's a major psychological level for us. We know that the banks are either going to do one of 2 things. They're going to push price down into that level, or they're going to push price down right above that level in the form of discount, right? So we take our fib from the higher low right here at the London session low that we've identified all the way up to the highest point in price. And we can see that they push price down into about 90, let's say 7% discount from where banking institutions bought from during that London session. So I put in my buys. You guys saw my entry. My entry was roughly around 164,590. So right there. And then boom. So my take profit areas, why was I targeting these areas? Sorry, excuse me. This was the low that was violated when the market broke structure on the higher time frame. So if the market is going to show signs of strength or show signs of retracement, it's going to touch this in the form of supply demand. Okay, if you want to call it that. But we see that this is the last supportive area where the banking institutions broke structure If they're going to continue this downtrend, most likely they're going to come back, they're going to retest that in the form of a lower high, build liquidity, sweep that liquidity, and then move lower. So that was my first take profit area. I sent you guys that probably like 30 pips before it was hit. Second take profit area was the psych level above that, the 165,300. Okay, take profit one was hit, and I was, like I said, laying in bed, so I just closed the trade out. I didn't ride it. Let's see what GJ is doing now. So both higher time frame entries, both CYPRX confluences via the 15-minute area of interest where the banking institution swept liquidity and created the higher low, while also identifying the lowest point in price, utilizing the piggyback methodology. Understand that the banking institutions around these areas where they show sensitivity in the form of the higher low that was created after the sweep of liquidity, we know that if the banking institutions during future price action or current price action don't break those levels, they're most likely going to take buy positions from them. Even if they're temporary buy positions, they're most likely going to facilitate buy positions from those levels. Okay. So let's see what GJ does now. We've come back, we've retested, we're showing bullish intent again. This would have been another good risk to reward entry, probably on the lower time frame, right? Okay, what is up, guys and gals? Thank you all for sticking around for that YouTube video breakdown. Really do appreciate the love and support. As promised, I told you all that we were going to be doing a $50 XLM giveaway every single time YouTube pays me more than $500 to make this content for you guys. I'm going to be that different bystander on YouTube that really shows you guys how much money I make from YouTube. A lot of these traders, quote unquote, out here, they're not really making money from trading. They're not really making money from forex or crypto. They're really just making money from the views that they get on YouTube. And so I want to be, different from the crowd, and I want to give back to the CYPRX community that gives me the potential growth here, that shows the love, that shows the support, that comments on the videos down in the description below, gives these videos thumbs up, and spreads the cryptocurrency awareness, and is really down for what it is that we are trying to do here at CYPRX, and that is help people escape from the system. Before I get started on the giveaway, if anybody's interested in the CYPRX advanced mentorship, the link is in the description down below. You guys can visit cyprx.teachable.com. Don't forget, you guys can always reach out to me via the customer support email that's in the description below to book a Zoom call, video private chat with me if you guys want to, face-to-face, and I can actually physically show you all what you're going to have access in the CYPRX course material. So for the XLM giveaway, $50 of XLM will be deposited to one lucky YouTube subscriber. In tomorrow's YouTube video breakdown, I'm going to announce what you need to do to be a part of the XLM $50 giveaway. So make sure that you stay tuned for tomorrow's Friday cryptocurrency video breakdown. Blessings to you guys all. Really do appreciate the love and the support. Obviously, of course, you're going to need to be subscribed to the YouTube channel. So if you're not already, make sure that you do so now. Look out for tomorrow's video breakdown. I do appreciate the love and the support. And as always, be cognizant, be aware, and I'll see you guys in tomorrow's YouTube video breakdown.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh, la, 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 la.